Hello and welcome everybody to another week of Dinger Token's Cativersity platform. Just give me a moment here. I'm going to try to grab a share link so that I can share this out with some people to join. And we're going to go ahead. Oh, it looks like actually this is private, so we want it to be public. Done, save. Alright, looks like we started private on accident, so now we are public. So I'm going to go ahead and try to find a share link really quickly for you all so that we can all jump in here. And today, again, just like we were saying momentarily ago, we're going to be going over calculating risk to reward ratios. We're going to be going over using paper trading on the free TradingView platform as a way to practice if you want to start actually trading within markets. And then also determining if positions are plus EV. We're going to give you a little bit of a background on what EV means, expected value, how people can calculate it simply in a very almost back of the napkin way, and something that can be used as a little almost personal indicator or checksum to make sure that you're not, getting yourself into risky positions, that you're not managing that risk adequately. So, like I said, though, I'm going to try to grab a link really quickly. It looks like I'm struggling to find one, but if you give me one moment, I think I will link really quickly. It looks like I'm struggling to find one. But if you give me one sharing it into the thing, I'll link really quickly. It looks like I'm struggling to find one. But if you give me one sharing it into the thing, I'll link really quickly. So we're gonna go ahead and get started. So find one. What you see over here, sharing it in the left side is, or on my screen here. This is just the TradingView panel, right? So I'm sure a lot of you have been on TradingView before. And know a little bit about kind of what you can expect when you're getting into the TradingView platform. Something that I found the other day that I didn't know about is that they actually have this free, really cool paper trading platform that's free to use for anybody. So if you're wanting to start learning about investing in a more managed, hands-on manner for yourself, I would encourage you, don't use real money at first. Get out here and practice on a paper trading account. Learn the tools, learn the words, learn the methodologies, learn what risk is, learn what expected value is, learn about how people do technical analysis and fundamental analysis, learn about how people set support and resistance lines. Try to train yourself in all of this stuff before you start actually using real money and potentially taking risk. So what I'm going to do really quickly here is just showcase, though, I guess I'll start with going through risk to reward, right? So a good way to calculate your risk to reward, if you come in here and look at the TradingView tools on the left side, if you're taking a long or a short position, in this case, maybe I would say, we could be sitting around some support from here. So maybe I want to take a long. Some other people could say that we're right below this support and looking like we might be revisiting range lows and they want to take a short. There are always assumptions based off of whatever trade or position you're going to be making. And all of these tools are things that you can use to put quantitative values on some of your assumptions, okay? So I'm just going to personally say maybe I want to take a long position here. So I'll click long and I'll be going from where the market is, or what the market value price of the asset is right now, where I would be taking my profit at, and then where I would set my stop loss at. So basically where I would be, at this point, I know that my trade has failed. I need to cut it. I'm not willing to lose any more money, right? So you can use this tool that TradingView gives you access to, the long, short positions, etc., to basically get your own free risk to reward calculation. And so what's cool about it is, and I'll show you again on the side here how it works as well with the paper trading side. So this is still a buy order. We're looking at doing 1 unit of Ethereum, right? And so if the take profit is at $1,276, you would put the price for the take profit at $1,276. If your stop loss is going to be at $1,133, it looks like, you'll put your stop loss here at $1,133. And then it'll show you down here your risk to your reward, right? And so what that's basically saying is I'm willing to risk, right here, I'm willing to put at risk the amount of money between my position entry and my stop loss, or $38, for the potential reward of getting $104 worth of profit, right? All of this is based off of assumptions, though. You could be wrong, right? 10 times out of 10 and lose $37 10 times out of 10. You know, this isn't just guaranteed because you use TradingView's tool to calculate a risk-reward ratio of 3 to 3 that you're going to make money. You need to be thinking about the assumptions that go into this. So that's what brings us to expected value, right? So I was talking about plus EV. So when you're trying to figure out your risk to reward ratios and if you should enter or not enter a position, a lot of people will calculate a thing that they call the expected value of that trade. This is also based off of assumptions that you pull. Depending on your data sources or depending on what type of access to information or data you have, you can make better or worse assumptions. Your assumptions can be more alpha than other people's assumptions. But so if you're calculating plus EV or calculating the expected value of this trade, right? If you have a reasonable ability to say, I think there's a 20% chance that we go down and hit my stop loss, right? So if we go, let me pull up a calculator quickly. If we go, there's a 20% chance that I lose $38, right? And there's maybe an 80% chance that I make $104. The formula for plus EV would be the amount of money you stand to lose or make times the probability that that outcome would occur. So basically we're saying 3810 times 0.2, 20% chance that it happens. So that is a 762 value basically associated, a negative 762 value associated with that, right? It's negative because it's losing $38 is the thing there. So you have minus 762 plus the reward side. Remember we said we have an 80% chance that it's going to make us $105. So we'll do 105 times 0.8. And that gives you $84 minus your $7, and I think it was around 64 cents. So your expected value of this trade is $76, and your risk to reward ratio is 3, right? You're risking 1 unit for a reward of potentially 3 units. You can do all of this in TradingView's platform. Say you want to execute this exact trade. I set it up here. I looked at what it would be here. I can execute it. TradingView is going to do the paper trade, and now I can see on my platform what my positions actually are, what my entry is, what my stop loss is, what my take profit is. And now I can watch and see what's happening and feel what's happening the same way that I potentially would feel it if I was using real money, except I get to use fake money and learn about all of these things. So I would encourage you highly to get around and dig around TradingView, learn about their paper trading platform, take some shorts, you know, do some buys, do some sells, do some limit orders, set limit orders overnight, set what people call quote unquote stink bids sometimes, you know, like a $900 ETH buy as a limit. See if it hits sometimes on the paper trading platform. It might not, but it might. And you might start learning ways that you're able to interact with markets to extract value from them without taking on real risk ahead of time. And the cool thing about this is you try a bunch of stuff and you can fail at it here with no risk. But if you try something and you succeed, over and over and over again, and you're able to replicate it, and you learn what would be potentially new quote unquote alpha on the market, new potentials to earn value on the market, you can execute those trades with real money going forward. And you can do that on your own exchange, your own brokerage, your own platform. I don't know how to tell you what inputs to put into your expected value formula. I don't know how to say, it could be the real thing here. Let me pull the calculator back up. Is that there's an 80% chance that I lose $38 and there's a 20% chance that I make 104. So what does that look like? 104 times 0.2. So there's $20 of the value on the upside, and then on the downside, the 80% chance, there's $30 of downside. So this wouldn't be a plus expected value trade if your probability of hitting your stop loss is 80% and your probability of hitting your take profit is 20%. You would have a negative EV, expected value, of about $10, because remember it was about $20 on the negative on the positive side that you could earn, and it's $30 on the expected negative side of this trade. So this is when it comes into, it's all about making sure that you have really, really good access to data that's going to be accurate, and that your assumptions are based in real time, valuable information, that you're not just, sticking a finger in the air and assuming, oh, I think there's an 80% chance I'm going to hit the take profit because that's how the TradingView tool showed me it works. But it's cool to think about these things and develop a strategy for yourself, right? So I personally don't like to take trades where I'm risking more than I could get as reward. I like to take risk to reward ratios like in this 3 range, where what I could lose is a third of what I'm expecting to make. But I also make sure that I think about the expected value, and I put a real basis on my assumptions, and I try to think really critically, what are the odds that my stop loss is going to get hit? What are the odds that my take profit's going to get hit? If you can put your EVs at 50-50s and you're able to hit half of your trades successfully, then you might be able to move your risk differently. But learn about calculating risk, learn about calculating expected value, play with paper trading platforms, look at what the profits and losses are in real time. You can play with whatever amount of equity you want because it's paper, it's fake. You can trade with hundreds of thousands of dollars, with millions of dollars if you want to feel what that's like. But just practice, right? Nobody's going to be able to tell you to buy or sell. Nobody's going to be able to tell you what to buy or sell. But along your journey to learning about becoming financially free, make sure that you're learning the instruments. Make sure that you're learning the words, the language, the methodologies, the ways that other people are able to use these platforms to get the value out of the markets that they're trying to get value out of. But that's pretty much all that I have for today. I know that this was potentially a slightly shorter one than normal, but thank you all for joining. And I hope that you will like, subscribe, please leave a comment. If you will, make sure that you share this, share it on Twitter, share it on YouTube, share it with some of your friends if you want. But just try to get this content out there and support us. I'm going to go ahead and change the title of it, though, really quickly, and the description, because I realized I used an old one. But thank you again for everybody joining, and with that, I'm going to go ahead and end the stream.